Guys, let's go ahead and get into this recap here for the Thursday price action. And you can see we're actually here doing this recap on this Friday morning as the market's actually opening. You can see a nice little drop. But let's go ahead and start analyzing the price action from back in here. And it really, in the end, if anybody sat in this trade and if people start talking about, hey, look how much you could have made idea because you're looking at where we're at right now, be careful. I would set your exit levels, get out when the market says to get out. This could have easily been that reversal pattern and went back up. So don't get caught in that when you're trading. Just food for thought for yourself as you're analyzing price action. It's always fun to say, hey, I could go all the way down here and make this big move. But let's be fair, be real with yourself. So let's go ahead and dig into the price action from yesterday morning. And then for yourself, go ahead and set up the key levels for Friday and take advantage of the price action again where it's at. Let it tell you what it wants to do, and then when it tells you to do what you need to do to trade, you get in and take action in there. So go ahead and like and subscribe, guys, and check out our channel. Also, our lives are Tuesday, Wednesday, and Thursday at 8 Central Time. You can get on there and ask questions. I know we go through a lot of stuff, set the levels, talk about a lot of trading terms. Sometimes they are confusing. You can get on there and ask and find out. So let's go ahead and take a look at things here. So this is the 6 o'clock in the morning on Wednesday to the 6 o'clock Central Standard Time on Thursday. So you can see here's your low right through here. Here's your high right up through here. So if we're just going to mark those out, there's your top, there's your bottom right down through here on these key levels, the fixed range volume profile levels that are all marked up. So if you were going to take a look at price action and you're thinking, okay, what do I need to see, is we're going to use our moving averages, the 21 and the 200, which the 200 is marked as a yellow, the 21 is marked as this white line. And we want to see how it breaks our key levels. So you can see in here, this is the key level of support right here on the 15-minute that we want to see, and we're below both the moving averages and the two key moving averages. So I'm talking about the 21, this white line, and again the 200 on the yellow. You can see we're below both of those, so that means we're bearish. So the morning opens up here, and you can see it kind of trading sideways based on the last 24 hours, reading that price action with this. You can see it's just kind of trading flat. Then we start getting the break. You get a little bit of volatility in the morning. It did bounce where we wanted to kind of see this breakthrough, and it came back up and tested its 21 and 200 range. And the guys that kind of front run this is why I always talk about this, is if you were going to trade this just because it broke down here on the 21 and it broke through this little area right here, guys get in this, and this is where pattern trading you'll see with people. So I'll draw this pattern on right here, and then this was the area of the bottom, and you're thinking, okay, I'm going to get into this. Roughly, if you're trying to draw a basic downwards pattern, that's what you're looking for, and you want to go ahead and take advantage of this. Well, then most people say, well, put the stop right above the 200, and you're good to go. As you can see, if this came back down and right back up and took you out very quickly, and I used to be this kind of trader as well, and this candle right here is a classic candle that hurts a lot of people that trade that way. So this is why I don't like pattern trading a whole lot, is because of what we see right here. This is the move, and then you get frustrated because it comes back up and takes you out, because technically this should have been where you could have been safe in the market. Now ultimately this up here would have been the safe area to put a stop, and that's ideally what you'd want to look at. That's why you don't want to run tight stops, is what I would always say, and this is the reason why, as you see it. But if you really do wait on the market and watch, when you saw this kind of come down to the bottom here and start to reverse and come back up on the 15-minute, that would have been the reversal or the behavior that you could have said, hey, I'm going to get out. Regardless, what we're looking for is, like I said, you really want to see a breakdown through this lower area, and you can see the fight happened here in the morning, bounced up and started to break down. So once it started to actually start to trade off its 200 and start coming back down and get down to this area, for this trade, really I would want to see two candles close below this. So there's this broke through and closed, and then you have your 1, 2. We're in the downward cycle right now. So I could go ahead and say, hey, I'm going to mark this area right here, and let's go into the 5-minute and start looking at this actual trade here to take advantage of it. So on the 5-minute, you can see that it is set up for us. So we're underneath the 200, we're underneath the 21. That's everything that we need to see. It's below these key levels of support and resistance. So this is where we could look at taking the advantage of the trade. And you could get in basically right off of that 200 with your 21. If you wanted to, you could have waited because this is down. You could have waited for, you know, anything that starts to show any type of curling in this pattern. So you could have easily got in somewhere in here and take advantage of this. Now, of course, when it broke back above the 21, that's when you want to get out. So in this case, we always traded the 21 on the 5-minute as an exit, and this would have given you the exit. You can decide how you want to exit. For me, when it starts to break above this, a lot of times I just get out. I don't like to wait for the close and then get another 1 or 2 closes, just because it could do this, right? It broke, and then you got the 1, 2, and then it started to run. And you can see in the end, right through here, if you did with the strategy of you broke 1, 2 closes, and then this is your area. This is somewhere where you would end up getting out. So you would have got a little better than the guy that just got out when it broke right through here, but not by much. I mean, this is a 2.5 basically, and that would have been a 2.9. So I mean, it would have been a little chunk of cash, but this could have easily been the 1, 2, and you closed back up in here anyways when you got out. So you definitely want to get out of the market right through here. Now, that's the reason why I like this trade over the guy that got into all the stuff I was showing you before, because look at all this you missed, right? This is a lot of movement that you could have got on. The thing is, though, this is, by waiting with this, is you're almost, you're in the run, right? You're in the position, you're in the move, you're in the trend, and you're catching the trend, and then now it's ending right here is what you're basically saying. The guy that got in here, he's getting in on the drop of the trend, and you can see this volatility that kicks in. Look at these big candle movements, and that's what you're trying to avoid, is you don't want to get caught in that, like I was showing you earlier in the video where that guy got stopped out because of this wick. And you're avoiding all that for basically the key levels of support and resistance. You're using that 15-minute. That's why I marked it right here to show you that. It's breaking down, and you're taking advantage of it. And if you're watching your 15-minute, it feels like you're already too late because it's already moving for you, right? So this was the open, and then it's already all the way down here, and you're like, oh, this is already over with. But really, it's giving you a key area to kind of get in. You could even have got in. Obviously, you could have been waited even longer for that candle. So how you want to trade, but... and you can see how it trades down. Now, the 15-minute, really, in the end, when it crossed here, it's still right back where you originally got out on the 5. The 15 crossed. So really, if in the end, when you start looking at all this, you got set up on the 15, use the 5 for the entry, you definitely want to be getting out, because this could have been an easy reversal. But now you're probably looking at it going, oh, great, well, now we're already down into this level, and that could have been a really good trade. You know, even if I drew this out, drawed this on out, and took it out here to the bottom, it looks really great. You know, it's a 7-to-1, but... the reason why we trade the system and stick to it is because of the easy reversal. You don't want to get caught in the reversal, because this went all the way back up here, and it could have already got up here and then stopped you out and then came on down and stuff. It's better to look for a re-entry. Again, if you were trading last night and you had this, you analyzed your levels, you could have possibly got back into this trade. And if you're kind of asking like, well, how? This is your bottom right here that you would have been looking at. Obviously, you would want to draw on your key levels. You're using your 21 and your 200 to help you keep in the bearish, neutral, or bullish settlement. If I drew this on up, it's somewhere right up here was your original break, and here was the original bottom in that move. So this is showing you that we could see about 193,500 basically for a target that we're in right now. But this is into this morning. So yeah, to finish talking about this though, when this started to reverse and lose its 21 again, now you're below the 200, now you're 21, you're on the 15-minute, it broke this key level of support right here. So there was your break, your 1, 2, this is your candle, 1, 2, this is the candle you'd want to look at, go back into the 5-minute. Here's your trade that you'd be looking for to get into. Now this is set up here for this to actually look at getting into. The hard thing is your trading is in the early morning before the market shift, right? And movement. But if you ended up getting into this trade, you're watching the 5-minute, your stochastics want to be up high. I didn't look at the 15 actually when I was talking about this. Yeah, the stochastics are here at the bottom, so that would have been my red flag. It's because stochastics already topped out. What I want to see is I'm back up here, so I'd really be looking at this trade right through here, and the reason why is because my stochastics are topped. I always use the stochastics when you're looking at a break major resistance. I watch the stochastics. If they're bottomed out, that means they want to push up. Obviously, price action didn't push up. That's a great sign for you to look at on a trade. And you could have been looking at your trade this way. Now it's topped out. Now you could say, hey, you got into here. Obviously, when the market's live, you're not going to know that it would have pushed up higher. So right through here, this would have been reversal. So I would have been looking at the trade right here. Let's go into your 15-minute. I'm above it. So each your own, you're going to have to make a decision here. To get in, it's not as clear because you're in a lower key market, and you could have looked at getting in, because every time it breaks the 5-minute, in my case, I would say get out. So obviously you have the ups and downs, this is why I only trade in the morning and talk about the morning, but I'm just going to point this stuff out. So if your rules are, if it's above the 21, you want to get out. If I was going to trade this, I'd want it down below this and look at getting in. So this is the candle that I would look at getting in on. If you're asking me like, well, how do I know? I'd want the 21 to be broken because I'm below the 200, below the 21. I want it to be broken and I want 2 candle closes. So I'd be looking at entering on this candle. What hold me back is the Stochastic now are bottomed out. So that's where I'd have a little bit harder time to jump in. And then you can see that obviously it broke up and then it broke down again. There's your 1, 2. Again, now we're back on the uptrend. So I want to look at getting in on the 2 candle break right here. So I have the close below, it gets back up. Then we get the breakdown, close, 1, 2. This is the candle that I'd look at getting into now. But again, I'm back on the bottom. So you can see how the stoches are keeping me from being able to trade because my rules are saying, well, you're already back down here and you're having a hard time with the 21. So then I got to wait for us to get back up here again. So here we are again, the close, 1, 2. This is the candle that I finally get to get into. Again, though, you're still in that same position. So really, it's not letting me get an entry based on my system. So even though the market's trading down, and you do need to wait for things to give you those signals to be able to take advantage of it. One last thing, though, I will point out, let's go out to a bigger time frame here and kind of give you some bigger scale. A lot of people want to know where this is going to go, and want to help people out with that understanding. So to make this easy, is you have this 200 moving along. I'm on the daily chart right now. You have this 200 moving along. See how it broke the 200. So when when it breaks right here, we know that this high is set. So this is the highest high of the market so far. So we can set that, right? So then we're looking for the lowest low, like where we're going to go. Well, we don't know that till it breaks back above and starts to build out of it. So obviously you can see the chop and stuff. So you could have called this the lowest low at the time, and this would have been the chop that's going on. You want to see it rebuild. Obviously we broke back down and you're still waiting. Then we got this break and started to trade. So then you can build this. You can build this out where you can mark your Fibonacci on the bottom, and then you're asking, well, where's that next highest top? It's kind of like what I was talking about here when it breaks the 200. Well, we broke the 200 right here, so that set your highest high. Well, when it set that highest high, now I could actually connect the low to the high, and now I have my Fibonacci levels on this chart. So now that we're looking for this to possibly break down, now you're looking at these levels over here, this 0.5, the 618, the 786. Those are all areas that we're looking for this to go to. You can see how it traded right down to that 0.5 right here. This also broke right down to that 0.5. So when this broke, you could have drawn this line on here pretty fast and had this marked. And now you're kind of watching the 200 or the daily with the 21 and the 200. It's the same thing we talk about in the 15-minute every single recap. So now you can see that we're lost. We're underneath right here. We're in the neutral zone, right? We're in between the 2 moving averages. Then we got above, so we could start going a little bullish. This is where it gets a little exciting on the daily, but then you can see we lost these 2, and the 21 crossed through the 200, so that's bearish. Everything is considered bearish now. If you're looking at a key area of where this could go, this is the pattern right through here. This is an area that this could break down to right now. And the other thing is we do, to make this clear, I'm basically drawing a bottom line off of here. And I'm using this, and why would I draw this pattern, this bear flag on here, is because I'm using my 21 and my 200. So, and I'm just kind of creating, there's no rocket science in this. I mean, there's no Zacks, if you will, because everybody's going to look at these candles differently. So I'm just kind of splitting the bottom between all these bottoms here. And I'm kind of just looking at like, well, that's about to break. That's why I've marked it here. Obviously, these 2 points of contact are following your 21. 21 became bearish. This lost this key level right through here, which puts me below the 200 and the 21, bearish. And then we can see we kind of backtest this on the daily. So we are looking at going down now. Obviously, we've already been in this pattern, but this is kind of how you read the price action. And now you have key levels. So if you were looking at saying, hey, I want to add money into a longer term trade, this is it, right? So when this first started to break your 21, you definitely want to be adding. Now you add just a percentage of capital on the side. If that was the case, you could add every time it broke through the 200 if that was a strategy that you wanted to use. That's up to you. But definitely when it comes down to this next level, you'd want to be adding. So this would have been an add area as well. And now you're down here on this next line. You want to be adding here. And now you kind of can see the pattern. And I drew it, after the fact. But we kind of know like this would be an area that you might want to be. Anywhere in this zone, you're going to want to add. Now, because this could show a bottoming somewhere through here. So I would not be surprised if we find a bottoming in here. This is all the way back into the sweet spot, if you will, on a pullback. So that's just forward thinking. So if you're kind of trying to figure out, hey, where's this going to go? That's it. We're looking at it right through here. So yeah, you're right now at around the 94,000 range. 94,500 range. I'm showing a chart around the 90,000 right through here on a target, and then your sweet spot was around 85,700. Those are all key areas that we're watching for. Not saying that we're going to go down there, but that is an area that I'm looking for on a bottoming of the market area. Obviously, this could be the bottoming, and we'll start getting a rotation. We're just going to watch and see, but now I have my key levels, and I can trade accordingly. This is a longer-term type of investment mindset. For yourself, if you go back and do what I just talked about, if you looked at the high, so when it breaks, again, to clarify how this works, is once it's under the 200, when it breaks back above and starts to trade, there is your bottom. And then if you're looking for that top, it's when it breaks back through the 200, now there's your top. So let's go ahead and go back in price action. You can see the same behavior. Here is your break of your 200. So you would go back and say, well, this is the highest point, so there's my top, right? And but if you're going to drop your Fibonacci lines, you need to find the bottom and go to the top this way. You want to work to your right of your chart. So here's my bottom right here. This is where the price action got broke back here on the 200. So there's my top. So I'm going to get my Fibonacci tool and I'm going to hit the bottom, take it to the very top. Obviously, this is where the price action is. When this broke, this was on February 28th, at the end of February 2025. So that's when this all happened. So you could obviously start making sound decisions on how you'd want to invest. So you could have bought right here. Here's your 0.15 or your 0.5 you could have added. Again, it started to trade up. You got pretty excited, but it started to break back down. You can see the 21 coming into the 200 yet again. Same behavior that I was showing you just a minute ago on current price action. You can see it being underneath the 21, so now we're bearish, right? And it found a key level down here. This is where I built the last Fibonacci going up that I was talking about earlier. It almost came down to this area right here, the 618, but didn't quite get there. Now, if I drew this flag, this is why I want to point this out, because I drew that flag earlier just a minute ago on this. If I'm using my 200 and my break, this is hard because there's not a lot of support back here to really draw this stronger behavior on this, but you could be looking at something like this. And this is where I say be careful on patterns. This is a perfect example because this is the pattern I like to say. If you were going to break, we're going from the top bodies to the kind of the bottom area, and then we would look for this to dump. Well, it didn't ever even dump out, right? I mean, it barely broke out and came right up against you. So be careful. Like even what I'm drawing here, if you looked at these two patterns, here's the drop, here's a stronger drop, and then it broke back up, climbed out, and reversed. Well, you kind of broke out. Now it's broken down below. Yeah, back tested a little bit, but yeah, maybe it does come down in here a little further. Nothing ever is perfect, but are we going to get all the way down in here? Maybe not. It could bounce right through here, reclimb, and then take off again on you. So yeah, be careful when you're trying to use patterns. Really what we're looking for is putting dry powder, your extra money on the side into an investment so you can take advantage of it as a longer term move. This is it. Now, if you look at longer extensions, so I drew this here, there's a 0.5 extension up through here. So we're looking for this to run up to that higher extension from the last move. So that's areas that you could look at for targets. So this area here that I just drew on this Fibonacci, it's up here at 150,000. So when this rips up, these are areas that you could take profit percentages if you wanted. So I might be talking a lot, talking about a longer term investing here, but I'm trying to show you how to read price action. So to give you the biggest, clearest picture of understanding, right now we're okay everything that it's doing right now. This all considered pullback till it breaks to this area at 74,000, 75,000, basically right in that area. This white line is my strong line in the sand. Once it breaks this, then I'm actually going to have to really start to look at more bearish behavior in the chart and then look at bigger levels for it to bounce back in and start to reclaim. And we know that's going to be a longer time frame for you get into a reversal. So be a smart trader and analyze the markets the way you should, and then you know your key levels and you know what you do because the trader really doesn't care if the charts are up or down. All they care about is levels, and take advantage when those levels get hit. So right now you're in a red day, the market, everybody's freaking out, but that's also a time I'm saying this is where you'd want to add capital, right here in this green line. So if you're already pretty much on the green line. So for me, if you ask me, well, should I add? Why not? I guess you could add here, you could add there, you could add a little bit below. That's up to you. To me, I would say, yeah, go ahead and add if you ask me directly. Add, I would have already added as this started to right in anywhere in here, I would have added. Obviously down here would have been awesome, but right here is just as nice. So I would have been in the market right through here. Maybe would have added a little bit as this started to break down and show that you were going to go down. So I would add a little bit possibly there, or I would have held because I know it's going to drop and I would have tried to get a better price for an entry. just like we're in this pattern. And I would be adding more, even though it feels weird because you're going redder and you're actually putting more in the market. That's the way you want to invest, because it's pulling your average entry down with it. So this starts to recover. Your average entry isn't right here. If you put all your money in right here, that's your entry point. But the guy that put money in here, he's pulling his average down a little bit lower. He puts money in down here, pulls that average closer to his second entry. He ends up adding here. Then the average entry is way down here at 95,000. Well, when it goes up, he's broken even. It runs back up to his first entry. He's in profit, and so on and so forth. So I hope that wasn't too confusing for y'all. Good information for you if you want to take advantage of it. It does show you key levels so you can look forward into the future and make sound decisions. So, all right, guys, we will finish up this recap and enjoy your Friday here, and we'll see you over the weekend on Friday's recap. Talk to you soon, thanks, guys. Take care.